Hello and welcome to the final episode for 2022 of the No Bullshit Property Podcast, brought to you by CERT Property. I'm Howard.
And I'm Paul. And we've no special guest for today's episode, but we're going to be looking back on 2022 and forward to the year ahead. May even look side to side. But before we get started with this episode, just a quick reminder to check out certproperty.co.uk, where you can find the latest UK property news, downloadable industry guides, and much more to help you on your investment journey. So without further ado, let's begin today's show.
Let's. And I feel like I've been looking side to side at some points during 2022. It's been an interesting year. There's a lot that's happened in the market during the course of 22, and obviously we've talked about parts of it during the course of some of the other podcast episodes, but the end of the year, time for reflection, introspection, assessing what went before and also what's going to come ahead. So let's do that. I think for me, some of the biggest points of change over the course of 2022 have obviously been the finance market and the mortgage market and the effect of the mini budget in the autumn and the effects that that's had on the property market. But you know that's actually only one thing in a sequence of, it should be plain sailing from here, and we're still suffering then from construction cost increases, which have been exacerbated, utility cost increases. So yeah, it's been a lot to deal with this year, and I guess some of the things wanted to talk about today was, how do we address some of these challenges we've faced?
So tell me, Howard, what have we seen during 2022?
I think some of the key things that we've seen, things that everyone knows about, things that have been well documented in the news, autumn mini budget being a real significant point during the course of the year, although there's been quite a few significant points, but the impact of the mini budget is probably the thing that is going to carry most significance going into 2023 and probably beyond, because of the impact it's had on the mortgage market. We've seen rents increase dramatically during the course of 2022. Manchester, our home city, had seen rents increase by over 15% by the end of quarter three, and that's probably continued to increase during the final quarter, though we've not had those figures yet. So we've already seen rising rents, and now with fewer people probably able to afford their first home or probably even their second home, we're going to see people stay in rental properties longer because of mortgage unaffordability due to increasing interest rates, due to the premiums that the financial market put on gilts after the mini budget. So I think that is one of the key things that happened during 2022 that's going to have a profound and long-lasting, at least mid-term impact on the property market and the dynamics of it. Another one has obviously been the impact of the war in Ukraine and the impact on energy prices and utility costs, which again I think is going to be something that has a profound impact on the property market going into 2023. That war in Ukraine also exacerbated construction cost increases, which were already affected from COVID and the pandemic and lockdowns and supply chains being affected. So we've seen across the course of the year dramatic increases in construction prices, and I was reading the other day that construction companies are facing highest levels of administrations in nearly 15 years. So some really key events having some profound impacts on the property market during the course of 2022, and it's been a really challenging environment being a property developer in this marketplace. And a lot of things for us to look at and tackle and overcome, and continue to do what we're trying to do and develop communities and places people want to live and work through into 2023 and beyond.
So how do you think we address that in 2023?
I think the challenges we've faced, like I say, are having these impacts on the market, and it's responding to them. There was already a trend in the UK towards people renting longer. In the UK, some stats here. The UK has 5.2 million private rental households, so 19% of all households are renters. And the build-to-rent sector, which is purpose-built rental properties, is less than 2% of all households, whereas in the US it's over 37%. So that is something that I think will help address some of these points, is the evolution of the build-to-rent sector and more rental properties becoming available for people who otherwise can't afford to live in properties that they own. I think it's important as well that these build-to-rent properties that are being delivered, there is a reasonable amount of rental stock out there, but it's older properties that are not well insulated, perhaps not well managed, and not well maintained. These new build-to-rent developments that are coming forwards are not only modern but also satisfying the modern tenant demands. So giving someone, we'll talk about utilities, our lights have just gone off, guess we haven't paid the bills. Is these new build-to-rent developments satisfying not only the supply-demand imbalance that's persistent out there, but also satisfying it in a way that satisfies what a modern tenant and a modern occupier wants. So I think that's one way the market is addressing some of these challenges.
So it's quite a British cultural thing for people to own their own property. Do you think we'll see a shift in a mindset going forward?
I think we already are. And part of it is out of necessity. Many people have got on the housing ladder over the last 25 years, 30 years, often using the help of Bank of Mum and Dad, but as there's further constraints on family savings and incomes, and inflation erodes savings, that becomes less viable for a number of people. But just away from that, there has been this mentality shift, and I think part of that is because of some of the build-to-rent schemes that have come forwards. There's been a shift in mindset as well, away from the fact of, well, you've got to move to the suburbs and buy your first house and get married and have the kids and the dog, and live in the suburbs. You can do all of that in the city centre. And therefore people are actually choosing to live in the cities. And it's no surprise actually that many of the sort of forecasts out there, and I was recently reading one by JLL that was stating that they expected the city centres to outperform the rental markets and the property markets in the rest of the country, the more suburban or rural property markets, because of that preference for people to remain in the city centres, because of the facilities, because of the amenities, because of the lifestyle, and because you can have all of those things in these modern purpose-built built-to-rent properties as well, which are also energy efficient.
I think as well, post-COVID, obviously we are in a cost of living crisis, but people want to have a good time, to enjoy their life. We're sat here in Manchester recording this, and we've talked before about the hospitality industry in Manchester is booming in some areas, and there's lots of disposable income going around. People have come out of those 2 years of COVID times and lockdowns and really have a mindset that they want to enjoy their lives.
Yeah, indeed. And that's a more fundamental, I think, generational shift as well, in that people rather pay for experiences than possessions these days, and that perhaps goes as fundamentally towards whether you buy your property or rent it. You'd rather have the disposable income to have shared experiences with your friends, with your family, than tie it up in a property. So I think there's perhaps a deeper, more fundamental generational shift there. And another key fact that really emphasises all of those points is that in 1990 the average age of a first-time buyer was 26 in the UK, and it's now 34 years old. So there's been a number of contributing factors like we've just talked about, but all of those are converging to as I say, mean that people are choosing to rent longer. And that's why we're seeing these rental increases. But that's why these can be addressed by the delivery of high quality, purpose-built rental schemes.
So whilst we're sat here and I can no longer see any of my notes due to the fact that the lights have gone out. However, it brings me nicely onto our next question, which is, along with the topics we've just discussed, we're very much in a climate where people are talking about sustainability and what they're looking for in the properties. The reason the lights have actually gone off is because we're still, and we put them on sensors to not use as much electricity. Hence, now we're not moving, they have gone off. However, as a developer, how can you appeal to these renters, to these buyers? What do you have to do to be more sustainable now?
Yeah, I think the sustainability point for 2023 is a real key issue. As we said before, cost of utilities increasing. That is a big challenge that everyone's faced during 2022. And it will be a key challenge for affordability for people in 2023, particularly with the removal of the price caps in April. Yeah. So, you've got to look at ways of how do we address that challenge. Well, one of the ways is delivering more energy efficient and sustainable properties. Delivering rental properties on a bills inclusive basis is something obviously we've been talking about and looking at doing. It becomes challenging to do that as a developer if you don't have certainty on what your utilities are going to cost, and also challenging, as I say, in the backdrop of construction cost increases where just building a simple, straightforward property is already more expensive, never mind one that is very sustainable. But the element that helps with addressing that is the rise in rental costs. So, that actually then makes it more viable if you are going to get a rental premium, and particularly if you're going to get a rental premium for a more energy efficient property, then you can invest the capital necessary to make it sustainable. But it is a key challenge. Like I say, the energy efficient technology that we need to install in many cases still isn't largely standardized, is still relatively expensive. So we do have challenges in the future to address what is a key fundamental issue. I mean, we have been forced to address it as well with the tightening of building regulations, where during the course of the year these change, so we have got to build more energy efficient buildings.
And is there any support available to be able to do this? Or is there a need for that support?
I think there's often a trade-off, and it's probably something we can talk about on an episode where we're talking about the planning system, where much of the opportunity comes from trade-off of other elements of what you're delivering. So if you're delivering something that is exceptionally sustainable, can you mitigate what would otherwise be other development costs that you may face? Other than that, like I say, a lot of the support has to come from market forces, which, as I just said there, typically, as we're looking at it now, will be the increased rental income you can generate from a modern, community-focused, sustainable built-to-rent development.
So we've talked a lot about rents increasing and what people, the quality of life that they're looking for and what they're now spending the money on. Do you think we're going to see rents hit a ceiling, or how do you think people will quantify the rent they pay going forward?
I mean, you're the head of property management, so throw that one back at you. Okay,
great. That's what I was looking for. So I think that's all in how we build the communities, and I think what we have seen over the last year is that evolve at a really fast pace. So when we first saw build-to-rent developments come into the market a few years ago, they were quite basic. Now, they almost get better with everyone. And it's really about how you can engage that community. But also, I think a key factor for me going forward, and in line with everything we've talked about there with sustainability, is will people want to do things in groups going forward to not just have experiences but also to save on their own costs. So that might be in co-living developments where they have the opportunity to live in smaller properties but be part of a bigger thing, and might be to do events weekly with other people where they'd not just meet people, but that would be an opportunity to mitigate the living costs.
Yeah, I agree. And so I think, the question that you posed is, will rents hit a ceiling? I think the growth that we've seen can't continue at the same pace just because of the wider economic pressures. But more fundamentally, in the UK housing market, we've got a shortfall of homes. Whether we're looking at a micro level within some of the key cities that are, the key employment centres, or whether we're looking at a national level, there's predictions that we may continue to under-deliver over the next 5 years by circa 100,000 homes per year. So it goes back to supply and demand basics. If you already have a shortage and you are then consistently under-delivering new homes, and like I say, new homes that fit what a modern lifestyle and a modern person expects, then you're going to see rises in rents for those properties. Perhaps a slower trajectory for the older properties that don't meet what modern households want. But yeah, I think for the right properties, the modern properties in the right locations in the major cities, it makes sense that there's going to be a continued rise in rents because they're suiting the needs and they're in short supply.
And do you think people will have a different outlook on that? So they will actually be willing to pay more for more that they get, or almost kind of they'll be willing to pay more on their headline rent because the all-inclusive package is you get the group events, you get the friends, you get the possibly bills inclusive. Do you think there'll be a different mindset on what people will be willing to pay?
I think there's obviously different demographics and there's different price points. Fundamentally, as I say, there's been this cultural shift that you can perceive that people would rather pay for experiences, and people's expectations are being reset by these modern purpose-built build-to-rent schemes coming forwards, predominantly in urban locations. But not everyone can afford to live in those. So that's why sectors of the build-to-rent market, subsectors of it, are gaining traction and gaining prominence, such as co-living, where you're looking at perhaps a smaller private living space, your own, private space, a studio or one-bedroom apartment. If it's smaller, you're paying a lower rent for it, but that's compensated for by having much more facilities within the buildings where, like you said there, that you could do more things communally, which has the social aspect to it, but as you rightly say, also has the saving of cost aspect to it as well. If you're doing it outside of your own home, in inverted commas, but still within your own building, then you're having the best of both worlds. So yeah, I think obviously everyone has their own perspective, and some tenants will still just be motivated purely by price point, and that's why a market exists with differing properties and differing price points. But I think generally speaking, the aspirations and expectations are being reset for a large swathe of modern households.
So we've covered quite a lot of ground there on 22 and things that have happened in the market and things that have happened as a result of them. Are there any other trends, apart from those that we've discussed, to look out for next year?
As I said, the evolution of the build-to-rent sector and that splitting out into subsectors, I think, is something that will continue into 23 because there will be this greater swell of rental demand. So I mentioned there co-living, and seeing that as a subsector of build-to-rent, and that becoming more prevalent, more established, as that can satisfy the demands for people who have the expectations of the communal lifestyle that build-to-rent offers in locations that they couldn't otherwise afford to live and with the facilities they couldn't otherwise afford to have. So development of that as a subsector. Otherwise as well, I think other subsectors of build to rent. So one that is starting already to gain some traction is suburban build to rent, which is more rental houses rather than apartments in city centre locations. So I think that's another element of the industry that's going to continue to grow as its own independent sector. And then taking it further into the property life cycle and senior living as a build to rent product. I think all aspects of the living sector are going to see an increased focus on rental properties rather than properties for sale because of the results that we talked about earlier. So all of the above for residential. Commercial, I think, is a more difficult one to really call with a great deal of certainty. Like I'm fairly certain that all of the above is going to happen, but commercial, we've seen headwinds and pressures in different directions. And there was obviously the extended period where people were working from home and then flexible working, and then I think the cost of living crisis has then pushed some people, as we talked about, into actually wanting to return to work who maybe otherwise didn't, because again helped to moderate home energy bills. So there's been these different pressures. We're facing a period of potentially a relatively extended period of recession in the UK, and certainly of low economic growth. So that's putting a different set of pressures on. Does that mean businesses are going to be more conservative in their growth plans? We've seen different sectors face different pressures as well. The tech sectors face some challenges, retail's facing challenges. So I think commercial property is facing a bit more of an uncertain landscape. But again, I think the same thing wins through for commercial that we said about residential, whereby if it's a modern, energy efficient property in a good location, then it's always going to see demand for it. So I think there's perhaps a focus for a lot of commercial landlords to improve their offering, to try and remove vacancies, to reduce vacancies in their buildings. I think much as it is for consumers and home residents, it's at the forefront of minds of commercial occupiers. And of course we talked about that in an earlier episode with one of our tenants, the Arts Bar, where they'd never really considered before about utility costs, and then when it came to negotiating the lease with us, it was a key item that we actually had to include within the lease. So that's my perspective on commercial. I don't know if you had any further thoughts on how it might be affected over the course of 2023.
I think you've touched on it there, and the tenants that are coming to us now, what we've seen this year especially is the process can be long. People are shopping around, but people have a lot of questions to ask. Businesses have a lot of questions. Like you've just said there, they want to ensure that things are energy efficient. They want to ensure they've got breakout space for the staff. So landlords are having to tailor the buildings accordingly. We get all sorts of questions, such as, what are the utility tariffs at this time? Can we project our electricity usage ahead? What is the building's EPC rating? These were perhaps things that, going back just a couple of years ago, we didn't have these type of questions. People took that for granted because they didn't factor in utility costs in the same way. But in some instances this year, we've seen people's utility costs be more than their actual rent. So it's now a big deciding factor, and businesses especially are taking a longer period of time to be really considered and to make the projections going forward to ensure something is suitable when they're making that sort of commitment. So, moving on to some more positive news, what has been ours as CERT's key highlights this year?
We've had our doom and gloom moment. No, but I'm actually, despite everything that we said just now, actually really optimistic for 23. I think many people have looked at the economic backdrop and the financial backdrop and been concerned that the housing market and the wider economy was set for a significant crash. But I think if we look at where we are compared to previous recessions, like in the early 90s, and the global financial crisis in the 2000s. In the early 90s, whilst inflation was high and growth was low, employment was really high at that time, and the British economy was still facing these structural changes away from our industrial past. So, I don't expect that we're going to see, anything as intense as it was back then in terms of the housing crash. And the same for the global financial crisis. That one was purely built on credit, and the house of cards that was created collapsed, and it wasn't based on people's true incomes and earnings. The property market had been pumped up by artificial credit. And since then, lending practices have got a lot tighter, and the housing market is a lot more stable fundamentals, because mortgages have already been difficult to procure over the last few years, and they've had difficult hurdles. So, despite saying all of the above, I'm actually optimistic that 23 and beyond will be a positive place for the property market. Yes, there's going to be some pain, and a positive place for us. Going back to answer your question.
I was just going to say, that was completely not my question, but as you were.
But going back to answer your question, I think some of the highlights for me this year, from a project perspective, we've had a start on site on a really important project for us in Stretford, where we're working with a housing association to deliver 40 affordable homes and just some open market houses. So that's our first predominantly affordable or majority affordable scheme. And yeah, despite the challenges that we talked about, we're still able to deliver affordable housing for the market as well as open market. So that was a really important moment for us early in the year. Progressing a lot of our other projects through planning and pre-construction, and having to look at construction a lot more innovatively, which we have. It's taken us the course of the year to, I suppose, get to grips with some of these things, but that has meant that we are now better set up to consider how we can integrate modern methods of construction, how we can integrate sustainability, as we've talked about in earlier episodes. Another key one for the course of the project perspective was letting of one of our properties in Liverpool to a major international software and gaming company. So, despite everything I said there about the commercial market, the office market, if you have the right property in the right location offering the right thing, then there will still be demand for it. So from a property and projects perspective, those are some of the key highlights. But I think one of the things that has been a key highlight for me is just how the team has progressed, how we've adapted to these challenges, and we've had an incredibly low staff turnover, and we've got some incredibly dedicated and motivated people. And yeah, I'm really proud of how we've faced all these various challenges during the course of, well, not just 2022, but 2021 and 22. And yet I'm still here saying that we're optimistic about 23 and excited about facing these challenges in the years to come.
Well, I think that's a positive note to close the episode. We're in darkness, we're cold. So I think it just goes for us to say to all our listeners, have a great Christmas and a Happy New Year. And you'll hear more from us in 2023.
Yeah, look forward to continuing that optimism in 23.
Thanks for tuning in to the No Bullshit Property Podcast. If you like this episode, let us know on Instagram at CERT_property, and let us know what else you'd like us to cover. Also in the new year, look out for further content on investment and how we can take advantage of the property market, rising rents, and maximise your returns.